All right, guys, it's Paul Singh, the Market Speculator, with the free weekly swing trade report at bullsonwallstreet.com. Last few weeks here, we've been talking about in these weekly reports the weakening or narrowing of the run in here. We talked about this initial pullback. We went with that one where we went away from the big tech and went towards some of the low floaters after trading a lot of the big tech in here. Then we had the breakdown, which was kind of a fake out. And then last week, we talked about the potential for the break of the 50-day, and we got it. So that's where we are this week now. So everything's been kind of playing out as we've been analyzing this. And now we're below the 50-day moving average. This basically sets us up for a bigger pullback here. We had the kind of topping pattern. Now, if this is going to hold really nicely, we generally would have run already. And now that we broke this key level, the old highs, which really aren't that old here, just a few months, are in play. So we're at 233.94 on SPY here. We're looking at the 50-day, which is at 235.14. Now, these things never go down in a straight line, or rarely do. So, this bounce doesn't invalidate anything today. We're still under the 50. Maybe if we start to get over the 9, then we get a little more, thinking, okay, maybe we're going to bounce up here. But I'll wait for the 50-day bounce. Until then, this is basically just kind of some back and forth before the next move down. That happened here. There was some back and forth. That happened here. There was some back and forth, some bigger back and forth in here. And now, if I was to guess, I would say we're going to test this level in here, and that's going to be a key level. So that's what you want to be watching right now. How does SPY react in here? Now, maybe we get a resumption of trend, and sometimes they are kind of messy like this before resuming. So it's kind of an if-then statement here. If we get back up over the 50-day moving average, we start to get aggressively long again. But if this just kind of consolidates here and then we break here, we're positioned well for it. I'm actually in 3 shorts right now and UVXY. So not really heavy, only 4 positions, and they're not big position sizes, but we are ready for a pullback in here. So this is the next level, this old high here, going back to December, and then this new one here in January. So essentially, the upper 228s to 230 is this range where we're going to look for support. Maybe at this point, we could consider adding some longs if it looks like it's holding, as well as the idea if it rebounds here. So watch this level very closely. We could get some wild moves this week with earnings. Netflix is today. Goldman Sachs, Bank of America is tomorrow. Then we've got some others coming up during the week. So maybe that has an impact on the market, but definitely watch this area very closely. And we've got a couple of trading vehicles we can use for just our market related analysis. And that's what we're doing here right now in the free report. In the regular swing trade report, we've got some stocks we're watching, but let's focus on the indexes right now. So we can use SPXU, which is the triple leveraged inverse. So if you're looking to short, you can go long SPXU here. You can see it's basically kind of, I don't know if it'd be called the opposite of the mirror image of what SPY is doing. And if you want to go long, you go long with SPXL. You can see here, this is just like SPY, except you get triple the leverage. So you get more volatility, which is what we want as traders. Now, the other thing you can do if you think the market is in sell-off mode, which is what we're watching for very closely, is trade VIX. And we would trade the triple leverage, get a lot of volatility in here, UVXY. So if we look at this, already a big spike from 15 to 20. So it's already made a 20% move when the market hasn't done close to that. So you can see how aggressively VIX can spike, especially the triple leverage, when the market is doing this kind of thing. I'm in UVXY right now, essentially a hedge. The idea here is if I get stopped out, it's no big deal, a couple of points, risking $500 to $1,000. But if this thing spikes and the market tanks, this could go up to 26 to 30, and I'm looking at risking 1,000 to make 5,000 or 6,000. This is what I always do when I think the market is selling off. So pay close attention to this. Have SPXU, SPXL on your radar, and then have UVXY. And if you're looking at some of the other sectors we're watching financials, especially with all these earnings. FAS is a long. FAZ, and you can see how weak it's been after this huge run. FAZ is the way you would short it by actually going long FAZ. And then semiconductors have been beaten down as well, and you can use SOX L to go long or SOX S to short. Also watching biotech, although biotech is not moving with the market, has actually been showing some recently relative strength, but that would be LABU and LABD. All right, so that's a free weekly swing report. We're watching the market very closely, looking for continuation move or remount and basing our plays off that rather than stock specific type movements.